Hey y'all, this is Tommy Lackey with PowerInvesting.com and Relativity Capital Advisors. Today is November 9th, 2021, and we're going to take a look at the consumer discretionary sector for our drill down after having a great conversation and seeing some good work from Doug Bush on the sector a week and a half ago. We were going to do this last week. However, unfortunately, we had to do some website upgrades, go to a new server, because the website continues to grow as we add more and more information for you guys. So let's go ahead and dig in, take a look at what's going on in the consumer discretionary sector, and see if we still have some good opportunities in front of us, even though it did have a big week last week. We always like to start these out by taking a look at the Power Universe, which is an equal weight universe that we calculate ourselves daily and chart, so we can take a look at what kind of the overall markets are doing, not just the largest mega caps out there. So when we look at this chart, we can see that the Power Universe broke out maybe a week and a half ago, and the RSI moved back into a strong bull range over the 60 level after holding 50 on this last little jut down we saw. Now with this gives us a good idea that we're starting to move out in a broad market. Obviously it goes with the IWM outperformance we've seen recently, as well as the MDY or mid caps. When we look down at the breadth, we also see a lot of strength here. 73% above the 20-day, 73 above the 50-day, and 65% above the 200-day. We like to see this keep growing, get up in the upper quadrant, but for now it's great improvement to see, and at the same time we see that the advanced decline line has finally made new highs. This is important because a lot of people have been talking about the New York Stock Exchange advanced decline line, but it's got so much trash in there. We like to have a much cleaner view. As we move down next to the comparative charts, you can see right here the relative comparative is that it's just now starting to pick up versus the SPY, flat versus the QQQ, and it's been falling hard versus the IWM, as the IWM has shown so much outperformance in recent weeks. But on a percent making new highs and new lows basis, we're starting to see a lot more new highs on the 10-day, 21-day, and the 63-day after a big dearth here on the longer term area. And the new lows are pretty much dwindling away as we move through this. Now, when we start to look at the equal weight sector rankings to see where we are on the consumer discretionary, we can see once again, I've chosen one right in the middle. As y'all all know, I like the ones that are RS movers. This moved 19 points over the last week, but yet are not already at the highs of the rankings. I tend to find better opportunities going forward here in the middle. However, we can still find good strength and good things up at the top. I just like stuff that we might be able to ride a little bit longer and aren't maybe getting in a little late. Great opportunities in all these sectors, but it's just something to think about if you're initiating a new area in your portfolio. Now, as you can see here, the equal weight subsector rankings, I've already sorted by the sectors, so that way we can take a look at what's actually going on. This is also in the blog, so you can see how the consumer discretionaries are ranked, going down from retail is the highest at 88, down to diversified consumer services at a 2. Now this is versus all the 51 subsectors that we follow, but this gives you an idea that it's a very wide range of what's going on in this subset or in this sector, and so it makes a lot of sense for us to see where the strength is and isn't, depending on your style of investing. Now, before we jump right into the consumer discretionary sector, I want to give you all a little gem on the website that you may not be familiar with yet. Underneath the Universe tab, you'll see Power Universe RS rankings. You see different RS rankings all over the website, but what this one does is this ranks every single stock in our universe, about 2,972 as of today, and it ranks them from 100 down to 0, so you can see where the strength is and isn't, or you can go in here and you can type in a ticker of your choice, and it will immediately kind of pull up where that one is, so you don't have to search through almost 3,000 stocks to get there. So this is something I think is really strong in the portfolio or in the website that you can go and check your securities by if you like to. Now, what we want to start with is the universe count to kind of see where we are. As you can see here, We have 64 in automobiles, diversified consumer service is 25, 76 in hotel and leisure. Household durables has 42, internet and direct marketing 44, leisure goods 20, and retail 68. So it's a pretty large sector, but it's broken up into 8 different subsectors. So we got a lot to cover today. And what we're going to do is we're going to cut down on the number of stocks I cover so that we can get through this quicker. And then I'm going to have those tickers listed at the bottom of the blog post so that you can go and review yourself the ones that I have pulled out and feel like I like. I'll cover a few in each sector in the sector and ETFs and subsectors, but not as many as we have, so we can hopefully keep this video a little bit shorter. So starting on the sector level, the first thing we always do is look at the RSI chart. We notice the universe RSI chart had already broken out, but we can see here on the consumer discretionary, it hasn't quite made it to the new high level yet. That's okay, because as we know, we're getting it as it's starting to move back up in a relative strength fashion. You can see here, it was real strong up into the August level from a 12-month standpoint, but it started making its way down, whereas the shorter measures started pulling back earlier than that, bottomed in the September, October, and have now started to move back higher. This kind of draws our attention back to the area so that we can take a look and see what's going on inside. Now, from a breadth standpoint, again, not exactly as strong as the overall markets, with the advanced decline line not hitting new highs yet. However, we're above 60% above the 200-day average now, 73% above the 50-day, and 76% above the 20-day. All good strength, and I think well worth us looking at this as a rising sector. The summation moving higher as well. So again, a lot of our intermediate and short-term measures are showing us good strength at the moment. From a comparative standpoint, you can see we're starting to improve the relative strength or the relative comparative versus our universe. This trend line is looking like it may want to break here. Not as much versus some of the major indexes. The SPY, it's outperforming. The Qs are still working ahead of it, and the strength in the small caps recently has been really hard to best, I guess is the way to put it. But when you look over here to the right side, you can see we're starting to see some new high clusters again on the 10-day. The 20 days are the ones that are really starting to kind of move over this recent range, as well as the 63-day highs. Again, we had a huge dearth here for a while with lots of new lows, and all those are starting to disappear. On each move down, they got smaller and smaller, and now we're starting to move out of that particular range. Now, when we look at the equal weight subsectors just versus each other, again, we run this data, we create these from our universe, and we look at these and rank them just versus each other. It gives you a better clue of kind of where the strength is just within this sector, not versus all the subsectors. When we look on the subsector pages, you will see these readings in the snapshot table on the right under pure RS. Okay. Moving on down to the consumer discretionary ETFs. Again, we all know that your strongest, or your XLYs, your diversified market cap weighted ETFs have been performing really well and already have broken out. That's mainly due to Tesla and a few other largest holdings. What we like to do is sort them by our RS movers. As you can see here, we've already done this, and we have a few here that are showing strength recently. XRT is making a move, PSCD, PEZ, PEJ, AWAY, AWAY. We're going to look at some of those here in just a minute. But we think it's worth looking at these rankings this way and who the movers are, both on the upside and on the downside. Worst here is BETS and BJK, our betting and gambling ETFs. Are some of the ones that just are not making it, or China, China-related ETFs in the sector just aren't performing well. Now, also on our pages, you can go on down to the stock, the relative strength here, and you can sort them in pretty much any way you want. It comes by default. It's going to be sorted in the RS rankings from 100 to 0, but you can sort them by the movers, by who's moved daily, weekly, and all of that. We're going to take a closer look at these as we go into the subsectors, but first we're going to go through some of the ETFs that we feel are showing some strength. The first one I have highlighted here is away. I mentioned it was one of our movers, but I want to also note, look how this held the daily RSI bull range on this pullback here, gapped out the last 2 days and moved back over 60. Now the weekly is still in a bear range, so we want to keep that in mind, but this is a nice little basing action and then break. So give it a day or few to consolidate or watch it and see how it works, but there are plenty of levels here that we can work against on this one. Another one we're going to look at is PEJ, excuse me. As you can see, a nice wedge up here right near the highs. RSI bull range never really lost its strength on the weekly. The daily came back, couldn't break the 40, so held the bull range and is now back up at 60. Again, we have a lot of these with bearish engulfings yesterday, but realize we got to see how that plays out because they had really strong weeks last week, so it may just be a few days of consolidation we have to kind of wait through. So put these on the radar and see kind of what happens with them. Another one I want to point out here is BFIT. Kind of thin, but it's one for health and fitness. Looks like it's right at its breakout level. And then our home builders, the XHB, right at a breakout level, and the ITB, which is right below it because it's more builders and less retail. But both look really strong here at the moment and look like there's some good potential. And we can even go to the ones that are even on the other end, something like iBuy, that has pulled back a good bit, trying to find some support here at this low on the weekly. RSI is holding 40. So if we can get a pop back over maybe 114 or so on the 114 and change on the daily chart, this one might be one to look for a reversal. Again, this all depends on what kind of trader you are and what kind of style that you like to use. It's not about my style, it's about which one you, but they can all be found in these different rankings and through these types of visualizations of the relative strength. All right, now this week, in order to help save a little bit of time, I'm going to both cover each sector a little bit quicker, but I'm also going to try to hold off on not covering as many of the tickers, maybe 4 or 5 per subsector, so that we can get through quicker. However, all of the tickers that I've highlighted in each subsector will be at the bottom of the blog post, so you can go through and research them yourselves. So apparel and luxury goods is where we're going to start. Just go through them alphabetically. And as you notice here, this one's already broken out last week. Strong move off the lows. RSI is up in the 70s, which is a great thrust here. So we might need a little consolidation. It might not. You need to watch, see where you are. This is the equal weight. But notice how the relative strength has moved up a good bit after taking a little bit of a break here in the fall. Now, pure, which is versus just the subsectors, as I said, are all listed right here, but the ones on top of the charts are these top, which means it's versus all of the subsectors, all 51 of them, so this shows where it's ranked in our entire universe. Now, looking at the breadth here, strong breadth on the percent aboves. 20 is at 97, 90% is the 50-day and 83. And then our new highs on the advanced decline line, summation is running. Again, a lot of strong breadth here. This gives us no reason to think that that's going to stop. We need to see the weakness first. Let's not try to anticipate it. Now, moving down to the comparatives, this is where this one really stands out. Look at all of these moving higher. It's even outperforming the IWM, which has been on a scream. So looking over the right, then percent making new highs, new lows. Again, look at these big jumps after kind of lackluster and quite a few lows here during the summer and the early fall. Now, the percent making new highs have jumped big, and the percent making new lows have pretty much disappeared in this particular subsector. Now, one thing I want to point out is we do have to realize that with some of these subsectors that aren't huge, 20-something, 30-something holdings, those percentages may move a little bit more, but it's still the best way for us to compare them versus all the other areas from a breadth or a initiation type strong or weak standpoint when it comes to using new highs and new lows. Using percentage over pure numbers, we think helps us a lot. So in this particular one, we're going to take a look at a few of the stocks here. We're going to start with PVH. PVH is one that looks like it's kind of in an internal breakout area. RSI is moving into a strong bull range here after holding back in late September. And then the weekly has a really nice consolidation that looks like it's trying to break out at the moment. Another one we want to draw your attention to is Movado. Movado is kind of in a similar position. Earnings are already passed. RSI held the bull range as it has consolidated to kind of grind higher. But when we look over here at the weekly, the strong bull range held the entire time, and it looks like it's cresting 60 again, trying to move back higher. This breaks out of this area right here, we could see a strong move up in Movado. OXM is another name that a lot of people don't know. We don't hear a lot about, but again, moves in above 60 on the bull range, showing strength. And also the weekly never really got that weak. VFC, another name, or no, let's skip VFC and let's go to Ralph Lauren. Ralph Lauren's one, again, is kind of has a little bit of the cup side of things and may even be part of a larger inverse head and shoulders type pattern. Daily and weekly RSIs are both in pull ranges. If we want to look at the ones with the small pullback, DEC would be one that basically is not off its highs, but it's right here in the middle of this gap. Close that gap, so now we kind of see what it wants to do. Earnings are past us, in bull ranges on both levels. See if it can move up for the break. And then again, if you're looking for the larger pullback kind of scenario, we have HBI that on a basis here broke down, broke below these lows, and quickly moved back above. Now, earnings just happened, so let's see what kind of plays out there. But if this one moves back over this 1860 level, I think it could have some legs under it. And then finally, we're going to look at GII, one that a lot of people don't see, but there are quite a few looks like this in the subsector to where they've come strong off the weekly chart, pulled back a little bit in maybe a larger type flagging or small basing action, and are now moving back. Big moves over the last week, so it might take a couple of days to work that out and kind of digest it. But then again, it might not. So find the ones you like, keep them on your radar, and find your setup. Next, we move on to the automobile sector, which is probably my favorite, as many of you know who follow me, love cars. This one also has just recently broken out last week and moving its way back into an RSI bull range on the equal weight subsector level. Relative strength has kind of come down, made a big trough here in the September-October area, and is now moving sideways. We'll see if it can start moving back higher. Now, when we move into the breadth, here we can see that the advanced decline line has not made new highs. Percent making above the 200-day moving average, above the 200-day moving average, has not made it back in the top quadrant yet, but is certainly moving higher, as well as the other two. Summation looks good. So breadth looks strong here. The relative comparative is a little different here than the last one we looked at. As you notice, the relative comparative is a little more flattening. Again, even with Tesla in here, there's been a lot of sideways movement in the overall sector, even some downright weakness. But when we look at the percent making new highs, new lows, you can start to see that after this last little jut down in late October, we're starting to see the new lows disappear again and the new highs perk up a little bit. This may not be the strongest in the sector as the relative strength showed us earlier, but it is something we can continue to keep an eye on. Your movers in the sector, you've got some strength and weakness to be looking at. CWH, GM, KMX, WGO, MUSA, a lot on the top level of the movement, not necessarily the strongest in the sector overall. However, when we move over and look at the stocks, there's a few I want to make sure I highlight here. A lot of the auto parts things look good. O'Reilly, AAP, AZO all have good looking setups here. As you can see, a nice little tight pennant on the weekly, the daily flag. Now we do have earnings here coming up on this one, so you want to make sure you keep that in mind. I'm not going to do the other auto players, but they will be in the list at the bottom. GNTX is right at a breakout level, already had earnings, missed, and has now regained all of that. That shows there's some darn strength underneath there, even with that earnings miss. So with this one, we're looking for a larger breakout here above the, say, 37 area, and then see if this guy can get moving. LCII is another favorite in the area, right at this breakout level. Now, there are quite a few of these, and maybe not names that everybody talks about. Group 1 Automotive, GPI, also PAG. These are the automotive groups, pretty strong. Tata Motors looks like it's got a nice little flag after a really strong run. Earnings out of the way, they missed and yet are right back at highs. Something to take note of. One of my favorites in the area is really more in the middle, is the CVNA, Carvana. It's one of these that the daily is not looking so hot after earnings, but missed earnings, fell to new lows and popped right back above it. And now it's trying to see if it wants to head back up. If that happens, again, good movement on bad news is certainly something we'd like to see. Quite a few others in this area. Another one a lot love is GM. Again, breaking out in that internal type breakout as it moves back into stronger positions in the bull ranges. And even here we can see some pullback plays, if that's what you like, to where we've seen something like Visteon Corporation, a great company in the automotive area, strong daily bull range, but the weekly touched 40 and is just now starting to work its way back up the right side. Blink was in that position kind of until yesterday. Huge move yesterday. See if it consolidates it a little bit, but with all the news in the renewable area, this might be one that's worth taking a look at. Now, diversified consumer services is the weakest of the bunch. Not only the weakest of this bunch, but the weakest of all subsectors, and this equal weight chart shows it. This has a lot of the education players from China, a lot of other little services in there that just really have not performed well. You are in an RSI bear range since all the way back in February, and nothing has changed yet. However, we did get this small failed breakdown that looks like it's trying to move back higher. So if you're one of those pullback players, there is a ton of charts in this area that you might like. Breadth is not your friend at the moment, lagging a lot of things. Relative comps are not your friend at the moment, lagging a lot of things. And the percent making new highs, new lows is just a mess. Okay, trying to improve, but it's so bifurcated in this particular sector. You have a few strong players and you have a lot of weakness. Again, not a huge sector, but it's something that we do want to keep an eye on, see if there's anything in here that we might be interested in, which of course, as there always is, the answer is yes. First, we have Uber, and Uber and Lyft are both in a similar position. They've pulled back, they came off the low strong, and now they've consolidated it out. Earnings are past, so we will see if they can move over, say, this 48.50 area anytime soon and get into a new RSI bull range on the weekly. The daily's already there and held at 40 on the way back. Love to see it. Lyft, very similar, but having a little bit different of a double bottom type look, or, we don't call it triple bottoms, but double bottom type look here, but really just kind of some basing action here around 44-ish, 43.50. And if we can move above the range around 56, then this one could keep going as well. Another one that a lot of people don't talk about much is OSW. Again, it came hard down back in March and now is trying to build its way out. Not really my kind of play, but if you're one of those that likes things that reverse or looks at that, maybe. UTI is one of the education players I do kind of like here, and looks like it's trying to move back above 60 on the weekly. Daily's already moved, and we've got this really strong consolidation right here. A break above this could move fast, considering where this stock is. And then on the other side of things like CSV broke out, pulled back to retest the breakout, now starting to move higher again. Earnings are past, they were strong, they got the reaction off of it. This is one you might look at for continuation, and or SCI, which is one that has a similar broke out. It's pulling back hard right into that breakout level. Again, back test can either be at the level or even a little bit deeper. So I'd say even all the way down to 64, 67 at the low of this candle might be worth keeping an eye on this one. Again, just a few in here. And then of course you can go all the way down to the other end and some of these that are really weak and say, okay, sorry, that one's not really weak. See, a lot of these have gotten hit and pulled back. I was hoping I could find one that's a little smoother, but it doesn't look like that wants to jump out at me. A lot of gap downs, a lot of near the low of these range, just not the kind of plays that I like. All right, let's move on to the next sector. Now we have hotels, restaurants, and leisure subsector, which is a big part of the idea of the reopening play. Gotten some serious movement the last few days with all the new drug and COVID relief type news. But as we can see here, it was already kind of consolidating, starting to move up a little bit, but it's held its bull range here for a little while, actually, since late September as it moves sideways. Again, not real exciting action until just recently, but it is starting to break over this range, and let's see if we can get some continuation. This is another one from the breadth standpoint that's really stronger on the short-term basis. The mid and long term have some strength, but long term's not quite there yet. Kind of like the automobile sector, our summation index here has not moved back over zero, which we certainly want to see to get a little more confidence in the area. From a relative comparative, you'll note that it's still kind of in the downdraft, but yet trying to curl. You know, you don't want to see too much into these curls until they start to really work. But versus other consumer discretionary, you can see it made a run here when everything else was weak. As the others started to strengthen up some, it basically stopped, and then now it's starting to curl back up just a little bit. New highs are jumping here in the last few days, but not really a tremendous amount. So again, this is not your high strength area in the sector, but it is something that we want to keep our eyes on because there's a lot of stocks inside here that I wrote down that I think we could be worth our attention. As you see right here, we're going to start with Boyd Gaming. Again, strong down yesterday, had some issues here and there, but look at this weekly chart. Give it a little time to work itself out. Got some nice volume, earnings already passed, and see if this guy can move back to the highs. Or, hey, if you want to play the quick short, that's your call if you think this is rolling over, and then you can play at the bottom of this particular range. Again, not sure I'd go there with both of them in RSI bull ranges, but that's your call. Another one that I liked in here from the casino standpoint was CNTY, or Century Casinos. Again, has moved up, had its little cup, and now tried to break out. Yesterday was an ugly candle on it, but again, not super weakness. Let's see how it handles this particular area. Another one in the hotel group is IHG. Again, if we zoom out this weekly, we'll see a nice large area here that it's trying to move on over. Again, a pop over this area, inverse head and shoulders type look, could show us some good strength for a while. Some of the other hotels have already broken out, but this is one that looks like it still has some potential. Okay, now we move on down to like restaurants, and we see things like Darden restaurants gap up on Friday, move sideways to, or a doji, kind of an indecision day yesterday. Might take a few more days to consolidate, but let's keep an eye on things like this. Daily has not moved into a new bull range, but weekly never lost its bull range. GDEN's another one, right up near those highs. Earnings is past us, has the potential to break out here. If we're looking for more internal type stuff, we have things like Dave & Buster's right there in the middle of a consolidation, well below the highs. PLYA, TXRH is one that looks like it kind of has that pullback area, came out of it, but it's right here at this downtrend line. So see if it can make it above that area and work its way back into some strength. RCL, as far as the cruise lines, looked like one of the stronger ones to me, right here with this little inverse head and shoulders, just below the, say, 97, 98 level, 98, I guess I'd say. Both in bull ranges on the daily and the weekly, and looks like it could continue to work. DENN, Denny's, again, more of a sideways action. Earnings is past us. It kind of moved down on it and is now trying to come back up to challenge this highs. I'll list all the tickers in the blog post so that you can look through all of these that I have marked. Another one I like is CHDN. Again, kind of your internal type thing. It pulled back off the highs after earnings. Now it's kind of consolidated, and we'll see if you can get back above the MA bands and maybe work up for a breakout here. On to household durables, which of course includes the home builders. This is a sector that had a lot of strength going into the early part of the year, but then kind of calmed down a good bit over since the April or so area into early October, but has started to kind of curl and perk back up. Again, has not moved back into a bull range yet, but it is one of the areas, especially when looking at the ETFs in the space, that we know has some good potential here. The percent above the 200-day moving average is only at 43, so we know that this is one that still has some work to do before we give it a ton of confidence, but again, might be able to find some early entries here or some nice reversal type things. A lot of the builders are looking that way, which we'll get to here in just a few minutes. But the breadth here is, we'll say, mediocre. Now, when we look down here at the relative comparative, again, household durables is not exactly shining. Its comparatives are not showing a lot of strength, so you're going to have to be real careful if this is the area you decide to go in, or maybe you just like these pullback reversal areas and aren't worried about the breadth strength. From the percent making new highs, new lows, we are starting to see things perk up, but on the longer term, there's still a good bit of work to do. Now down here, there are definitely some movers, some names that we like. RS, again, search by the movers, GoPro, HELE, that kind of stuff. Consumer electronics does fall in this area, so there are some strange looking names from time to time. But let's look at a few stocks in here. First one is LCUT, Lifetime Brands. Just a really good looking RSI, moved from the 40 level back into the bull range as it got up to the high of the range here. Looks like it's consolidating. Earnings was a couple days ago, and the weekly bull range never really faltered. Now, as you can see here, this one kind of sideways to up during all the mess with the rest of the sector. So something very notable that you want to keep an eye on and could show us strength going forward. Green Brick is also one of the less known builders. And basically, as you can see right here, great daily RSI bull range right up near these weekly highs, pulling off a little bit here right now. Now, we don't like where this is being capped at 60, but we can keep an eye on this one. If it makes it over, say, the 27 area, it could be a great looker for us. NTH, another builder, nice triangling type action here on the weekly, right up near the highs, never lost the bull range, and the daily is back in its own. And then we go to the, one of the other ones, TMHC, kind of one of my old faves, right back up near its highs in bull ranges on both levels, and earnings has already passed. We got that gap up, and it kind of did a sideways to rising consolidation at this point. Lennar, one of the big guys in the area, you can see again, there's nothing really wrong with that chart either. Toll Brothers, all these names have kind of similar looking, some a little better, some a little worse. One of the other names in the area, HELE, one of those consumer electronics, always like this name, always tends to do pretty well over time. New RSI bull range on the daily, the weekly never lost its, and it's got this internal looking breakout going on. Few other names that it might be reversal type. iRobot broke out after earnings, pulling back, see if it can catch itself and move back higher. Vuzi, earnings today, missed, so we'll have to see kind of what happens. And WHR is another one that has kind of had the pullback, an ABC type correction. We got a trend line coming right off here that's been broken. Let's see how it held the back test of that in these MA bands. But the weekly held the RSI 40 level pretty well and looks like it wants to move back higher. Another one in the space is WHR that we'll take a look at. WHR is a very similar type look. Oh, I'm sorry. WHR is what we were just looking at. I apologize. Had the ABC coming back and then moving back higher. Another subsector in the space that has not exactly been a pillar of strength is internet and direct marketing subsector. This holds names like Amazon, but also holds a lot of smaller players in the same kind of idea. However, if we look at this, the relative strength on this one has been just terrible, going all the way back to August of this year when it started to slow down. It didn't have quite as much, it had a little surge during the summer, and then it came back down now to this basing or this low type area, and is trying to move back higher on the RSI, but is not back in a bull range. So again, this would be one of those areas that where you're looking for a reversal, you're not looking to buy strength. However, when you have weak sectors like this, if you got things that are starting to really poke out and show strength as far as individual names, a lot of times I do like to concentrate those. That's one of the times I do concentrate on the higher relative strength names, is because they are the strongest in a weak sector, which a lot of times shows separation. From a breadth standpoint, nothing jumps at us here that really makes us excited. It is improving, but it definitely needs more improvement before we can really count on a whole lot there. Same thing with the relative comparatives, as well as the new highs, new lows. Again, notice this still has some spikes here and new lows just recently. So this is not one that has yet shown that it's really trying to accelerate higher. It's still trying to work through this little basing action we see here. From a stock standpoint, like I said, sometimes when you have these really weak sectors, it's good to look at the strongest names. I also like to look at the RS movers, and even sometimes I'll just say, okay, what moved the most this week? Again, that's the great thing about being able to sort this and slice it and dice it pretty much any way you want. Now we're going to go over some of the stocks here, starting with the big boy of Amazon. Again, long consolidation, trying to move back over a few of these things after missing earnings and then being bought immediately. Yesterday, it got caught up in some of the pullback after a strong one last week, but a little sideways, get back over this volume area, and Amazon could try to run back up, close that gap, and get into these highs. Dailies just now moved back into an RSI bull range or held right in this area. Weekly never really lost its bull range in this sideways movement. Again, nothing wrong with sideways. We just don't like down as much if we are long. Overstock is one that is a wild mover, so you got to know that. It's moved really strong over the last week or so, but a consolidation in this area around 100 might be good to set it up for another move higher. Daily bull range, weekly bull range, nothing really to argue about. SSTK, again, it just continues to march higher with some back and forth here. Remember this mushy RSI bull range I talk about? It not only has it on the daily, but now it's starting it on the weekly. Love to see it. This one could continue to move. Flowers, FLWS, flowers.com, not a fave. Duluth, again, big, strong pullback. It's moved really hard off the lows in recent days. But if it can consolidate and then break over this 17 area and not form a right shoulder, we could go back and challenge these highs and maybe more. Melly, kind of like the Amazon of Central America is what I hear it called. This is one that definitely has pulled back, based a little bit, and gapped out on this recent earnings. A little consolidation and a move higher would not surprise me at all. MMYT, another one that's up near the highs for potential breakout. Chewy is kind of your pullback play that made a failed breakdown here on the daily just recently after falling off of earnings, and has now started to get bought back up with some nice daily volume candles. RSI dailies in a bull range. Weekly kind of had a spike down. We'll see if it can get back up over 60 here soon. LQD, another one that is kind of in this triangle type action up near the upper rail. We'll see if it can move higher, as well as EXPE, one of the stocks there in the travel group that has already broken out. I put it here because it's so close to this breakout level. It might have a little consolidation and give you a good potential entry. Another one from a pullback standpoint, something like Lands End that has pulled back, based a little bit, and now trying to move back over it with not having earnings. It's already passed. They dropped on those earnings, and now they're trying to build back up. New RSI bull range on the daily. Weekly never lost it. So see, there's a lot of these different looks in this particular subsector, a lot of holdings in here, so I'll list them at the bottom and you can go through and look at what you like. Leisure goods is one of the smallest subsectors here, so we got to make sure we take a look at that and what these different things are showing us. It's in a pullback mode, just peaked over that RSI bull range shift here. It's going to have to still show some strength and continue to move higher for us to believe in this one. If it rolls back over here, it was just a spike on the upside, like we talk about spikes on the downside. Breadth here is mediocre at best. The short term, though, is starting to improve here on the breadth thrust, on the percent above the 20-day. Those kind of things are things we do like to look at from a short-term basis and see how the breadth is improving. But again, still a good bit of work to do. Relative comparatives all look bad. None of these in leisure goods are doing all that great, and the percent making new highs, new lows are jumping up as far as making new highs. But again, remember, we still want to pay attention to this, but we have to keep, kind of a little bit of a mindset of the idea that with very few holdings, like this one I think only has about 20 holdings, then that is going to change those percentages and make them move around a lot faster, maybe look a little bit larger if you don't take that into context. However, we do have some good strong holdings in here. Things like Yeti and stuff like that may be a little bit past, but when we look in here in the sector itself, we have some good opportunities here. VSTO, Vista Outdoors, is one that looks like it's in a breakout potential watch. RSI in a nice bull range, weekly in kind of that sideways move, never really got weak. And if we can break back over this area, 48 area, we should be pretty good. Earnings is past. That's what gave us the gap up. Now it's trying to consolidate that out. As long as it doesn't completely fail, worth keeping an eye on. CLAR, Clarus Corporation, again, came back and held the bull range on this gap down here, has moved its way back up, and just now giving earnings, so let's just see how that reacts. Another one that looks pretty good here is Mattel. Earnings are already passed. It's right up at the highs after this really big weekly consolidation. Strong move off the lows, so it could go directly through it or it could consolidate a little bit. You got to figure that out in your trade plan. New RSI bull range right here and weekly moving back over 60, so we do like the way this one looks. CDOO, DOOO, one that's basically the recreational vehicle area, came up and broke out, has had a nice flag-like pullback, especially looks a little tighter on the weekly for a deep back test, zeroing out some of this big candle, but yet now starting to try to move higher. You can set your trend line here, and a break over, say 94.50 to 95 might be something to look at. Mastercraft, another boat maker, nice basing action here, moving out above it, but we do have earnings here coming right ahead of us. However, Brunswick has already had its earnings, had this failed breakdown right around that, and are now moving back towards the top of this range. And if you look at it from the weekly standpoint, trying to break this downtrend line. Daily is not back in a bull range yet, but it's right there, and weekly never lost its. Malibu, another boat maker. Again, somewhat similar, slightly different. Earnings just passed. We'll see what happens there. Ely owns Top Golf, Callaway Golf Clubs, things like that. You know, in a bull range now, just barely peaked over it, but the weekly never lost it. So if it can continue to move over this trend line, if yesterday's pullback doesn't become a larger issue. Earnings is right ahead of us on this one as well, so we want to be very careful. And then Polaris, another recreational vehicle maker. As I mentioned, Yeti, a few of these others are in there, but some of them may be a little far for us to try to jump on at the moment. And our final subsector here is retail, which went on a tear last week. This is the one that I probably, would have liked to have caught on video a little bit earlier to give you guys a little more of an entry. But at this point, with a lot of these breakouts, we might have to see how they consolidate and try to get the next leg on them if they don't pull back hard. But as you can see, this went straight through the 60 level, broke into a new RSI bull range on our equal weight retail index, subsector index. And then from a breadth standpoint, you saw some nice spikes. You got 90% of them above the 20-day, 90% above the 50-day, and 71% above the 200-day. Now, this is not a small sector with almost 70 holdings in the subsector, I'm sorry. Almost 70 holdings in it. So when you start seeing these percentages get up here, you got a lot of things that are kind of moving well. From a relative comparative standpoint, same thing. You started seeing that comparative lines move up strong last week. Again, some of these things had 20+% move, so we might need a little bit of a pullback and consolidation, but I'm sorry, strength to me does not necessarily mean a move is over. We go over to the percent making new highs, new lows. The new lows pretty much disappeared completely last week, and the new highs spiked to levels that we really like to see, 40 and 50%. Those tend to be initiation thrust, not exhaustion. And then you get into this sector, you can sort this thing all around all the different ways, and you can see a lot of movement in these guys over the last week. We've got a lot of 20% gainers, 10% gainers, things like that. Doesn't mean there's not places for us to trade. It just means we have to be cautious about how we enter and make sure our trade plan is solid. In this one, we start with something like Shoe Carnival. Huge run. Earnings coming up and may consolidate into them. May wait till this one till afterwards, but as you can see, it's right near the breakout level on the weekly. This one could continue to move for us. A&F, so Abercrombie and Fitch, right up against those highs after its big move last week. Ulta is another player we like. It's a little bit below the highs, but as you can see, it kind of came down hard on some news and is now trying to make its way back up there. Overall, longer term, this tends to be a strong producer or performer. And you can see right here, it had a breakout back in August, and it's just really been consolidating that more than anything else. And on this pullback on the daily, it did not break that level. Good strength to see. GPC, Genuine Parts, a little bit of a breakout here, trying to back test some. Again, a lot of back tests in this sector right now, or consolidations that we need to be looking for. So you can give things a couple days if you need to. ZUMZ, straight move right up to these highs. I might have a hard time putting new money in here unless it gets a few days sideways or shows me a candle pattern that's worth attaching to. Home Depot has done a few days sideways going into earnings. Some want to wait, some don't, but this is a nice flag setting up. BKE, BBY. Let's just go on to this one. This one is already broken out, but the reason I look at this and bring this one up is because 123.24 would be a great back test area if it did end up pulling back a little bit. But note, when everything else was weak yesterday, it was not. So it could be something that just has some gas in the tank. ASO is one of the many sporting goods stores and retailers that are really strong right now. This is a newer player as far as IPOing, but as you can see, it's been really strong. It's on bull ranges on both sides. Hibbit's similar, or up in that breakout zone, been strong. Big Five, we all know, we've heard a lot about. Huge tail here, so you want to be have a really good trade plan on how you might deal with something like that. Then we have things like Party City that has come out of this small base here, might be setting up a head and shoulders, but again, if it moves back over yesterday's highs, this one could definitely see that 11 area or more. Funko has been consolidating sideways for a while, had a failed breakdown here, and then gap back above in earnings. A move back over 20 could show some serious strength. Dollar General is always a good one in the area. Again, came down strong yesterday, but did not close below this consolidation area. So a little small failed breakout here as it tested this little gap, but it also couldn't get below this little support area or the moving averages on the daily. So keep that one in mind. ODP, another player that's been consolidating out, had earnings. So now if we move over this 46 area, you might could see some more move there. There's quite a few. Dick's Sporting Goods, as I said, another sporting goods here. KSS is one that's moved hard, but right up into some congestion area. So some sideways move and then move back over. Could be good. And then you have things like Burlington that have pulled back hard and are now trying to move back up into these areas where there's some more volume, some kind of value area. And note that we made it slightly below 40 on the RSI, but really I would say I'd have to still call this a bull range for now until it moves back below. It's kind of a spiking look if we can move back higher from here. Burlington's is one of the names that's been very popular in the group longer term. Ollie's, again, stronger pullback. It's one of those to where, some like it, some don't. If you notice, here's the gap down from earnings, and we're right back towards that high with a little bitty pennant forming. So now a move back above this could be some really good. This is a huge sector, so I could just keep going. CTRN, again, looks like a nice basing action and kind of pullback action on the weekly. Daily looks like it wants to kind of challenge this big volume area right here, say around the 87 area. So that kind of gives you an idea of where we are with the overall retail sector. Ton of names in there, again, listed at the bottom of the blog. So just to wrap this up, we just went through all the different consumer discretionary sector overall and broken down into the subsectors to find where the strength was. You can go on the website yourself, powerinvesting.com, if you want to look for weakness and you're looking for shorting ideas. But right now in such a strong market, that's just really not my focus. So what we want to do here is try to find the best opportunities if we can think that this sector can get some continuation. And to me, the way it's moved off the lows from a relative strength standpoint, it is now showing some strength. I think it could be a good early entry for a strong move through the strongest season for markets as a whole. So keep an eye out here. Again, thanks for joining us. and going through this. And obviously, if you have any questions, you can reach out to me on Twitter at gtlackey.com or StockTwits. We also have powerinvesting.com, power1vesting.com on Twitter. And then Relativity Capital Advisors is our money management. So if there's anything we can do for you or answer any questions, please reach out, and we're more than happy to do. All right. Hope you have a great week. And as always, I hope this helps.